Hello kind people of YouTube, and welcome back to another daily news market update discussion, whatever you want to call it, video. I could bore you with why I didn't make one yesterday, but let's just jump into all the actual stuff of interest instead. First up, a look at the markets as always. We see here the market pullback continuing from the last couple days, but to a lesser degree. On the last 2 days we have seen that infamous weekend slump, where not a lot seems to happen on the markets in either direction. Most major tokens here up or down just about 1% or less, with the exceptions being Stellar up 3.82% and Monero down 2.8%. Aside from that, we're not seeing crazy movement here. The market as a whole at almost 212 billion is also just slightly smaller than it was the other day. It has lost about $1 billion in value, if not even a bit less, so down about 0.5%. And the 24-hour volume is also going down, becoming more normal again at 11.7 billion. When the prices shot up, we saw it at 20 billion, and since then it has been progressively falling, and Bitcoin dominance also 52.3%. That is ever so slightly up from where we saw it the last couple days, but not that much of a movement. Let's look at some analysis of what has even been going on lately, and most importantly here, or rather most interestingly, let's look at BAT, because the common wisdom has it that when a coin is added to Coinbase, it sees ridiculous price increases. But what we saw with BAT is that those price increases happened when it was added to Coinbase Pro, but when it was then added to Coinbase itself just a couple days later, it instead lost its value. And that is a bit unusual, so let's read this article from CCN. And as always, all these articles will be linked in the description for you guys to check out yourself. Since November 8th, within a 48-hour period, BAT lost 28% of its value following a high-profile Coinbase listing. On Friday, as CCN reported, BAT declined by around 20% against the US dollar. In the last 24 hours, BAT dropped by yet another 8%, recording a 28% decline of value in a 2-day span. The substantial drop in the price of BAT follows the official integration of the digital asset by Coinbase, the largest fiat-to-crypto exchange in the global market. On November 3rd, Coinbase officially announced that BAT would be live on Coinbase Pro to be traded against US dollar C, USDC, the stablecoin co-issued by Coinbase and Circle. 6 days later, on November 9th, the exchange disclosed that the integration of BAT into Coinbase.com and other products on the platform are complete. Upon the release of the positive announcement and the successful integration of BAT, the price of the digital asset sharply declined from 36 to 29 cents by around 19.5%. On the official opening day of BAT on the platform, the asset experienced one of its worst sell-offs in recent months. The decline in the price of BAT was particularly abnormal because the integration of BAT by Coinbase meant that under the guidance set forth by the US Securities and Exchange Commission, SEC, BAT is not considered a security, at least in the view of the characteristically cautious Coinbase. Now keep in mind here, whatever Coinbase thinks about it being a security or not is not necessarily what the SEC would come to themselves. But the thing is, the SEC seems to have just about no interest in looking at all major coins and deciding whether they are a security or not. They're just not really giving the guidance. So there's a lot of discussion around, should this be considered a security? Is this particular token a security? Is that one a security? With some people coming out and saying that none of the major coins should be considered securities, some saying they should all be considered securities. So whenever you hear anything like this, this is not final word. And also what a security even is very much that is very much a concept that that financial regulators invented at some point. So it's not very clearly defined. It differs from country to country, from jurisdiction to jurisdiction, and even within a jurisdiction, different people come to different results whether something is a security or not, which is one of the reasons you shouldn't be paying that much attention to this in the first place. In its initial announcement in May, the exchange emphasized that it will not integrate the 5 digital assets it has interest in that include Stellar, BAT, 0x, Zcash, and Cardano if it does not receive approval from local regulators. Unlike the ongoing process of adding Ethereum Classic, which is technically very similar to Ethereum, these assets will require additional exploratory work, and we cannot guarantee they will be listed for trading. Furthermore, our listing process may result in some of these assets being listed solely for customers to buy and sell, without the ability to send or receive using a local wallet. The full integration of BAT into Coinbase.com as well as 0x showed that the two tokens can be considered as non-securities under existing laws in the US. Once again, keep in mind here, this is Coinbase's opinion. Yet both cryptocurrencies suffered a significant loss following the integration and nearly dropped back to the point before the integration of the two assets on the exchange was announced. The BAT and 0x dump following their full Coinbase integrations demonstrate the typical buy the rumor and sell the news trend in the cryptocurrency market. Prior to the integrations, the price of BAT and 0x substantially increased, and immediately after they concluded, the price of both digital assets plunged. Especially in a bear market in which sell pressure is stronger than buy pressure, more investors will seek to profit off of short-term events. And this pretty much explains what is going on here, and a lot of people have been wondering. I've seen a lot of people ask, isn't this good news? Isn't this good for the token? Why is the price going down? And the thing is, technically it is good news. Yes, this means way more people have access to that token, can buy and sell it, can trade with it. That means people are more secure in their belief that that token is not a security, and thus that it can be traded more easily and with lower regulation. And it obviously gets the prestige associated with being on Coinbase. But the problem is the market includes a lot of people who are in it for short-term gains. And when they heard these rumors, they bought. And when the price shot up and when the actual news was out, they decided to sell. They wanted to cannot cut their losses because they didn't make losses. They wanted to take their profits out, hoping for the price to go down again to then either possibly buy again or use the money in another way. Whenever we get, especially if we get well substantiated rumors, then a lot of people buy anticipating the price gain so they can then dump them again. And sometimes that dump can be really catastrophic for the coins. Now in these cases they fell to just about the same amount of pre-integration. So it's not like this ruined the coin or anything, but we see that a lot in the crypto world where so many people are in it for these short-term profits and then instantly pull out that any positive movement we get going gets stopped in its tracks. And it's a very worrisome development because on the one hand, people want to make money, obviously. We're all investors, we all want to make money. And there's nothing necessarily wrong with putting your own profit before the health of the markets. But you have to keep in mind, if we want these markets to grow, if we always start taking our profits and crash the markets in the process, then in the long term that will make growth a lot harder, and we might actually have much better chances of getting significantly larger profits if we have a bit of patience, don't just think of ourselves, and let the markets grow naturally without instantly dumping coins that we just bought a couple days before off a rumor. But of course, if you're doing this, there's nothing necessarily wrong with it. It's your decision if you want to make money this way. It's just you have to consider what is more important to you, your short-term profits or the long-term health of the market and the profits that could bring to you as well. Continuing on, some Ethereum news. Now the Constantinople hard fork has been discussed for a long time, ran into a few pretty high-profile issues. Most importantly, they tried running it on a testnet and it just did not work out, and then it was pushed back. And now we know... Oh my god, I'm so sorry. I wanted to read this article first. Yes. Yeah, the explanation I just gave was for this article, not the other one I opened. But yeah, Constantinople, we know it's coming, but it had to be pushed back because there were some initial issues when it was running on a testnet. And now we have a tentative goal for that. Developers are eyeing January 16th as the date on which Constantinople, Ethereum's upcoming network hard fork, could launch. The upgrade for the world's second largest blockchain was originally targeted for November, bringing with it a host of design changes aimed at streamlining the platform's code in a bid to boost performance. Yet the November launch window was ultimately due to unanticipated problems with the test result, necessitating a longer development period. While the January 16th date was reached by way of a non-binding verbal agreement, it's not fixed or final. Indeed, developers on Friday's bi-weekly call said that Constantinople could be postponed further should additional problems arise. So that is all the important stuff we even need from this article, so I'm not going to read out the whole thing. If you want to, it's in the description. Takeaway from it is now the update is set to go live in the middle of January. Now, they have set the date of January 16th, but that is non-binding and they're just going to do it at some point around then. This update is of course pretty damn big and also widely discussed. It does a bunch of things. It postpones the difficulty bomb that is running on their platform. Now the difficulty bomb would become a problem in a couple months if not averted. It changes the reward size and it does a whole bunch of other smaller things. Changes how mining on the platform works essentially by changing the block size. All the details are in here. So a lot going on there. Also strongly discussed, especially from miners who, some of them have major disagreements with this, and there were some other proposals that would have also changed which kind of hardware would be preferable for mining. But very strongly discussed, but most importantly, it will streamline the platform, it will change the block size, the block rewards, and it will avert the difficulty bomb by pushing it back. I believe it pushes it back 18 months. Let's continue to the article I just accidentally opened but didn't talk about yet. Ethereum Joe Lubin saying blockchain will take a little longer to develop than the web. And I think he makes a good point here, so I wanted to read this out, because a lot of people have grown very impatient, especially with this prolonged bear market that we have seen now last almost a year. And I think looking at articles like this helps us understand a little bit why we shouldn't be impatient, why we should just wait it out, and the grass is greener on the other side, and sooner or later we'll get there. So let's read this. Blockchain will probably take a little longer to develop than the internet because it is much more complicated, consensus creator Joseph Lubin told German media outlet T3N in an interview Cointelegraph auf Deutsch reported on November 9th. Lubin, who is also the co-founder of Ethereum, told reporters that blockchain technology is developing in a similar way to the web, citing its exponential growth with hundreds of projects that are already practical for humans to date. Based on blockchain's use case for decentralized cryptocurrencies, the digital entrepreneur also suggested that distributed ledger technology will be able to permeate society more than the internet and enable the decentralized internet or Web3. Lubin, however, forecasted the adoption of blockchain on a mass scale will take longer than that of the internet. And his quote, "Blockchain projects will enable people to build more things that will come in handy again. That's how the web was developed. It will probably take a little longer because it is much more complicated. Also, because we work on topics such as digital money, blockchain will permeate society more than the internet. Everything will be networked in a Web3. In the interview, Lubin stressed the fact that Consensus, an Ethereum-focused startup incubator and infrastructure development firm, was born prior to the release of Ethereum with the goal of building the tools and infrastructure to enable a decentralized ecosystem in which Ethereum could function. Lubin also emphasized that the firm is interested in bringing that ecosystem forward rather than controlling it. And another quote from him, "We Consensus do many things, but we are not interested in controlling the ecosystem, we are interested in promoting the ecosystem." So that is essentially what we needed to read here. In general, the point he's here making is that the internet, or rather the web, and blockchain are qualitatively different. So while we do see, we can track their movements to each other, we have a strong analogy in comparing blockchain and cryptocurrencies to the internet. But we also have to keep in mind that they're structurally and qualitatively very different. Now for blockchain, there are a lot more ways in the way to mass adoption. The internet was one technology that enabled a lot of things, but that didn't necessarily include them. But for blockchain, you need significant development. You need to develop new technologies and new infrastructures everywhere. You need a lot of regulation, and that sometimes takes time. Especially if you want to be dealing with any kind of money, you need a lot of regulation. You need to invade established markets like the financial market, the fintech market. In some ways, we are doing that. We are a lot of blockchain is being used in assembly, for instance, now, and in on the assembly line and in stocking supermarkets, so they know exactly which store has how many products, all that stuff. They're kind of taking over, in many ways replacing traditional databases. So we're seeing that develop, but there's the internet was essentially if you had a computer, the wiring needed to be put up, and a lot of that could initially happen through traditional phone wiring. So there was a lot that could already be worked with, and the internet didn't aim to replace the global finance system, so it didn't have all that in the way. The internet didn't need to get a bunch of billionaire investors on board to even get started, really. So all of this is going to happen, but it's going to take longer. Blockchain is so much more. There's so much more potential there. It's such a larger scale than the internet could have ever hoped to be in its previous form. And all of that will take time, all of that will take longer. Essentially including this here to let you guys know, don't be impatient, just calm, and we will get through this. We will get through these bear markets. We will get through a lot of people not recognizing the potential there. And keep in mind, in the 90s, in the 80s, if you were using computers a lot, if you were on the internet, people also thought you were weird, people didn't understand it. Now everybody does. It's gonna take a while, but as a society, we're getting there. We are building the infrastructure, we are building the awareness, we are building the products, we are building the use cases, we are getting there. Now this one, interesting if you're holding Bitcoin Cash, but also if you're not holding it, because this is generally an article for anyone who has held a token that had a hard fork coming in the past, because this pretty much outlines how you should be behaving in the case of a hard fork, with Bitcoin Cash as the specific example here. If you're concerned about the Bitcoin Cash hard fork that's upcoming, you shouldn't necessarily be, because you have plenty of time to get ready and more than one option on how to prepare. As journalists, we are generally neutral on the subject. This article is intended for informational data, we don't need that. First, they explain what a hard fork is, and because I assume most of you guys know, but let's read this out quickly as well. A hard fork is when mining, and necessarily client, nodes no longer agree on the rules of a protocol, but continue to share the blockchain or permanent ledger of transactions previously made on the shared network. Technically, a hard fork exists after one block of the new Protestant chain has been mined, but in reality, a hard fork chain must survive much longer than that for the community and the world at large to consider it viable. A hard fork is not the same thing as a software fork, where the code is simply used to build a different product with minor and major modifications. Everything from Dash to Litecoin Cash is technically a software fork of Bitcoin. The best example of a hard fork is the Bitcoin Cash fork away from Bitcoin last year. Up until blocks mined in August of 2017, the Bitcoin Cash blockchain is identical to the Bitcoin blockchain, but from that point on it became its own entity and gradually has developed its own community, services, and now of course its own divisions. A replay attack is when the transaction details from one blockchain can be used on the other. If it were to happen in Bitcoin Cash when the fork first happened, it would have happened like this. You make a transaction on one blockchain and then the receiver uses the details from that transaction in order to receive coins on the other chain from you, without your permission. So essentially someone would be able to steal your tokens from the other blockchain that you're not even using for that transaction. In the Bitcoin Cash fork that is upcoming, which is planned to result in at least 2 versions of Bitcoin Cash, there will be no native replay protection. With previous hard forks failed or otherwise, replay protection was integrated by one development team or another. It is a serious matter at the heart of Bitcoin's user choice. There are no pull requests in Bitcoin, only push transactions. When the fork happens, it is advisable to make no transactions at all right away. And this is the important part, this you have to keep in mind. This is the big thing. Just for a day or two at least, do nothing with it, do nothing. One should decide which version of Bitcoin Cash they are primarily going to use and keep their existing wallet on that chain. Then the user should install the other version, access their coins on that chain, and once they have accessed their coins on a chain they do not intend to use, they should sweep them all to a new address of their own on that chain. In this way they will not be at risk of replay attacks because the coins are now held in different accounts or addresses between the chains. Failure to do this puts the user at risk of having their transactions replayed. So here, keep this in mind if you hold Bitcoin Cash and if you don't have them on an exchange. Unfortunately, with a lack of replay protection built into the new clients, you will have to do something if you want to secure the coins on the new chain. There is another option wherein you don't care about the funds on either chain, and under the scenario you are free to simply leave things as they are. If someone replays a transaction you sent them on your preferred chain, you wouldn't care anyways. And this is here a managed exchange wallet. Users who are overly concerned and not technically sure they'll be able to successfully migrate their coins themselves could simply send all their Bitcoin Cash to a cryptocurrency exchange that has explicitly stated that it will support the fork, where they will automatically be credited with the new versions. Then if you want either coin or both, you can withdraw them once the fork has settled. Potentially there could even be 3 versions of Bitcoin Cash, provided miner support is there for all of them. Many other exchanges will do this, but Poloniex has committed to doing so and has also begun pre-fork trading of both new versions of the code. So this is interesting for anyone. For any hard fork, this is something to always keep in mind, and I know a lot of people who watch me are relatively new in the cryptosphere, so you might know what a hard fork is, but you might not know how to deal with it. Now, the safest thing generally is if you have an exchange you trust, to put your coins on that exchange. That is what I have done in the past. That way, make sure the exchange actually supports at least one version of the hard fork, ideally both versions. But in that case, you can leave them there, you can wait it out, and then you're not a danger for these attacks because all the coins are pooled together and you have a credited amount there. So even if the exchange would fall victim to something like that, then that wouldn't be an issue because they would still reimburse you for those tokens. But that is generally what I have done in the past. If I knew an upcoming hard fork was happening, I put them on an exchange that supported it, waited there. That is easier, lower risk. Now, of course, you need to trust the exchange you're putting it on in that case, though. Now, for Bitcoin Cash in particular, these real replay attacks are a real concern. So be careful if you hold them in a wallet. And follow this information here, this article, like all of them, linked in the description. Continuing on, we have people here thinking the US debt will inevitably lead to a big crypto boom. This is what we've all been waiting for, isn't it? Shapeshift CEO Eric Voorhees has said that the growing debt of the US, which hovers at about $21.7 trillion as of November, will inevitably cause a big spike in crypto. When the next global financial crisis occurs, and the world realizes organizations with $20 trillion in debt can't possibly ever pay it back, and thus must print it instead, and thus fiat is doomed. Watch what happens to crypto. Voorhees suggested that to repay the national debt, the government and the Federal Reserve will be forced to print more fiat money, leading to inflation and a decline in purchasing power of the US dollar. Now, I have two minor issues with this. One of them is that this is not the first time major countries have been trillions in debt, and this is not the first time they are facing a potential financial crisis while trillions in debt. Generally, governments figure out a way to get around paying back their debt, and that is my second issue here, that the idea that the US government will even pay back their debt. Now, I don't actually know what the exact situation for the US is, which contracts they have, how they have to pay it back. But generally, countries will only pay back a tiny portion of their debt every year. Pretty much every country around the world has debt to pretty much every other country in the world. They're all in debt to each other, and this is a perpetual situation. Most countries don't actually have plans to pay back their debt. This is just a perpetual thing where they take out more debt, they pay back part of it, they will pay back their debt to some countries, they will take out more debt from other countries. This is a perpetual situation. This is one of the big ways in which the international monetary system is a serious mess. And we see this with every major country. They all have tons of debt. And this isn't a new situation. This national debt that the US has, that other countries also have. But the US, of course, has it to a ridiculous degree that isn't normal. But pretty much every country has a significant amount of debt. And they have gone through financial crisis with that debt. It hasn't led to much of a backlash or much of anything happening. But let's continue to the article. BlackRock, the world's largest asset manager with more than $6 trillion in assets under management, is the latest major financial institution to express concerns regarding the rapidly increasing national debt of the US. The conglomerate CEO Larry Fink stated that the US government is heading towards a supply problem due to the country's increasing budget deficit. Beginning next year, Fink noted that the US could be forced to borrow $1 trillion a year. The rising inflation rate of the US dollar, as shown by the growing interest rate of the Federal Reserve, has become too high to sustain the economy. That could be the real issue related to everything, where we have interest rates becoming too high to sustain the economy with its growth rates, he said. And here you see the debt. Nouriel Roubini, remember we talked about this guy before, he has some kooky things to say about cryptocurrency. A professor at NYU Stern School and a cryptocurrency skeptic echoed the sentiment of Fink, emphasizing that the interest rate has increased to the point at which the US economy cannot match it with its growth rate. Second, because the stimulus was poorly timed, the US economy is now overheating and inflation is rising above target. The US Federal Reserve will thus continue to raise the federal funds rate from its current 2% to at least 3.5% by 2020, and that will likely push up short and long-term interest rates as well as the US dollar, he said, predicting a major crisis by 2020. If a financial crisis is to occur by the end of 2020, as predicted by many economists in the US primarily due to the overly high interest rate set forth by the Federal Reserve, when the US dollar could drop substantially in value and open up investors to stores of value such as gold and cryptocurrency, whose value is not dependent on the global economy. Vinny Lingham, the founder of Civic and a partner at Multicoin Capital, said that more wealth could be created in crypto in the next 10 years than the past 10 years, despite several large corrections the markets faced and will continue to experience in the years to come. More wealth will be created in crypto over the next 10 years than over the prior 10 years. But remember, like any success story, it's not going to be a straight line up. Keep believing and just be patient. This is what I keep saying. This is what I keep saying. Now, I share concerns about the US national debt and the national debts of any large country, and I share concerns that we have a global financial crisis coming soon. We are overdue. All the indicators are pointing towards a financial crisis happening sooner rather than later. And I also do believe that there is good reason to believe that a significant amount of money might flow out of the traditional finance money in a market into crypto. Now, I don't think cryptocurrency has necessarily, or rather the crypto market has matured enough to receive all that money to really be the choice for a lot of traditional investors. I think the longer we wait until this crash happens, the more time we have, the higher the chances that crypto will really profit from this. I think if the crypto markets can mature a bit more, 2-3 more years, and then the crash happens, we could see a pretty much proportional opposite movement on the crypto markets as we see on the stock markets. If the stock market crashes, we could see the crypto markets shoot up as a result. Now, I don't quite think we are at the point where the crypto markets have matured enough for that. We have seen it happen in individual countries, but those countries didn't just face a normal crash, they faced hyperinflation like almost no one had ever seen before. That is very different. You have to remember, even in the massive crash of 2008, the US did not face hyperinflation. No major world nation faced hyperinflation. Now, in hyperinflation, your money loses value to the point where a piece of bread will suddenly cost millions in your currency. Now, we haven't seen any of that happen in a worldwide financial crisis yet. We've only seen that happen in individual crises in individual countries. And in those cases, we did see people flee from those traditional financial investments into crypto. But you have to keep in mind they literally lost 99% of the value on their money. Now, even if we have a massive crash coming in the US, if we look at historical crashes, it likely won't be anywhere near that degree. And some people might decide that crypto is not quite stable enough yet to be the store of their value in that time. Some people might just write it out in their local currency. Some people might be putting it into long-term investments that aren't as volatile. Some people might be putting it into other currencies. But I do think it's an interesting point to discuss here, and the debt definitely plays into it because, as mentioned in this article, it is all connected to inflation rates and to how much money is being printed. And inflation rates are connected to interest, and high interest is generally very bad for for an economy. But let's get to the last article today, and we have I'm gonna let you guys decide if you think this is ridiculous. McAfee Bitcoin at $1 million by 2020 is conservative. Wow, he's just going all out once again, isn't he? The true value of Bitcoin is escalating tremendously, according to him. John McAfee, a well-known tech-centric entrepreneur turned crypto diehard, recently sat down with Cointelegraph in an exclusive interview to discuss his views on the current state of crypto. Interestingly, even as prices stagnate and remain 72% under the infamously funny McAfee decline, the eccentric crypto savant has maintained his thought process that Bitcoin will somehow surpass $1 million during 2020, a mere 18 months away. And this is based on a Cointelegraph interview, and that is why I'm reading out this article, because the interview is a video. Late into the interview, the Cointelegraph interviewer posed a tough question asking McAfee how he makes a prediction for the future value of Bitcoin. Seeming prepared to answer such a question, McAfee noted that it's simple, touching on the fact that the growing number of transactions and individuals using the Bitcoin network indicate that the true value of Bitcoin is escalating tremendously. Now, keep in mind here, it is very questionable whether such a thing as a true value of anything even exists in the first place. You can have a long philosophical discussion about that. Economists have discussed this for a long, long time. And even if something were to have a true value, if the market value would reflect that, that is highly questionable. But let's continue on here. Just a few days ago, Ethereum World News reported that DR, one of the crypto industry's leading newsletter publications, noted that the number of on-chain Bitcoin transactions throughout Q3 has breached a quarterly year-to-date high, ousting Q1 by a relatively mere 70,000 transactions. DR's authors also revealed that Bitcoin transaction counts have been increasing month over month by approximately 3 to 5% for the past 9, making McAfee's claims all the more valid. Once again, keep in mind here, this is data for this year. Now, in Q1, of course, we saw a crash, so it is likely that transaction volume was rather low there. Because the markets crashed in the very beginning, a lot of people weren't moving their money around after the crash. So, there being a lot more transactions in Q3 than in Q1, and not even that much more, 70,000 more. That is not that impressive, especially since we don't have a comparison to the years before 2018. McAfee, the creator of the cybersecurity giant that shares his name, then added that investors shouldn't be fazed by the crypto market's short-term downtrend, as he pointed out that artificial pressures have only created a temporary issue for crypto assets. This I agree with him on. You know, it's always good when you can think someone is completely wrong on one thing but agree on something else. That means that you're just having a civil disagreement, and that you're not just hating each other just to hate each other. That you're not just talking in echo chambers here. That means that you're having a fair assessment of the other person. And as such, taking a forward-thinking approach, McAfee stated that if you track the usage curve of Bitcoin, 1 million per Bitcoin by 2020 is conservative, adding that eventually Bitcoin will be valued by its usage, not by speculative factors and investors. However, McAfee, bringing a fleeting sense of skepticism to his prediction, briefly noted that the real value of $1 million could be drastically different than today due to the hyperinflation of fiat or other overarching fiscal qualms. And here I think his entire argument pretty much falls apart, because it's one thing to predict that cryptocurrencies will take over from fiat in the future. It's another to say that Bitcoin particularly will take over from fiat in the future. And it's yet another to say this will happen by 2020. No, it's not going to. You can quote me on this. You can absolutely quote me on this. Even if we face a massive financial crisis in the next 18 months, even if we see a lot of inflation, even if we see the stock markets crash, even if we see the crypto markets gain significantly, fiat isn't going to die within the next 2 years. The infrastructure for that isn't there. The historical precedent for that isn't there. There is pretty much no reason to believe this will happen in the next 18 months. Now, if you think this will happen in the long term, that is different. I think that is a possibility if we're talking 15, 20, 25, 30 years. I'm not sure how high the possibility is, but I think that is a possibility. But right now, cryptocurrency is not at the level where it can replace fiat. We are not there yet. We don't have the scalability, we don't have the adoption, we don't have the infrastructure, we don't have the public awareness, we don't have the regulatory go-ahead to all of this. We are not at the point where cryptocurrency can take over from fiat. That is just ridiculous. Anyone who claims that we are right now or that we will be in the next 18 months, no, that is ridiculous. Now, cryptocurrencies have incredible potential. I say this in almost every video. And our markets, we are building up infrastructure at a ridiculous pace. We are getting investors on board. We are building use cases. We are increasing adoption. But we're nowhere near to the point where in 18 months, fiat will have crashed with hyperinflation. Now, in individual countries, we might see hyperinflation. But the major world currencies, the dollars, the euros, the yens, those are not gonna go through hyperinflation in the next 18 months, even if a major crash hits. Because they haven't in the past crashes. And the system is all set up to stop that from happening. And with that, I'm gonna end reading here, but it's just, I mean, I'm not sure how I feel about the prediction of Bitcoin at $1 million in general. Now, I think if the crypto markets grow as much as some people expect them to grow, and if Bitcoin manages to retain its #1 position due to the prestige associated with it, and to how much money from traditional finance is flowing into Bitcoin, you have to keep in mind, as much as a lot of us would like to see it differently, a lot of the traditional finance money, a lot of the traditional finance products being built on top of cryptocurrencies are being built on top of Bitcoin. because Bitcoin is what most people who aren't in the crypto world know. So Bitcoin isn't going away anytime soon, no matter how much some of us might want to, no matter how outdated its technology is, how unscalable it is, how superior other blockchains are. The simple fact is that Bitcoin is the most well-known, Bitcoin has a certain image attached to it, Bitcoin is the one that investors who are not in the crypto world know and have faith in. So that means regardless of how good the underlying technology is, there will be continued investment in Bitcoin. It's not going to disappear anytime soon. But at a million, let alone by 2020, I'm much less sure about that. And calling that a conservative prediction, well, let's talk about this in 2020, okay? Let's talk about this in 2020. And with that, I'm gonna end today's video. As always, thank you so much for watching. If you like these videos, I put them out every single day. Make sure to subscribe. If you really like this video, there are ways to support me in the description. I have donation links, or you could support through Patreon with a monthly donation of $1 or $3. I didn't make a video yesterday because I was out all day and I just didn't find the time. I'm very sorry about that. The next couple days I'm gonna be out of town. I'm gonna be traveling. Now, I probably won't be able to make videos while I'm away. If something really incredible happens, I'll try to make a video. And today I will try to get at least one video prepared that I can just upload now and that I can put live while I'm gone. So there should be some new stuff on the channel, but don't expect these news update videos until the end of next week again. And with that, thank you for watching. I'll talk to you guys soon and have a good remainder of your weekend.